Ladies and gentlemen, good day and welcome to Gujarat Narmada Valley Fertilizers and Chemicals Limited GNFC conference call for Q4 FY26 earnings, hosted by Anurag Services LLP on behalf of GNFC Limited. From the management, we have Mr. D.V. Parekh, Executive Director and Chief Financial Officer, Mr. Nitin Patel, Executive Director, Mr. P.K. Purohit, Executive Director, Mr. Rajesh Pillai, Company Secretary and Compliance Officer, and other senior members of the management. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. D.V. Parekh, Executive Director and CFO, GNFC Limited. Thank you, and over to you, Mr. Parekh.
Thank you. Thank you, Mr. Anuj, for organizing and Mr. Renju for being moderator. I hope I am audible.
Yes.
Okay, thank you. On behalf of GNFC, we warmly welcome to all participants on this Q4 and FY26 conference call. The company has shared yesterday the results, press release as well as investor presentation. Fair coverage is given on all the aspects, though we'll take up any points of question or observation during the question and answer session. For the information of all, the company has completed 50 stable years on 10th of May 2026. On this journey, except for 1 year, the company has been profitable all throughout the years, except 1 year, which is year 2014 and 15. In a competitive world, this is a recognizable record as on its way to stable years of operation, it has provided path of prosperity to various stakeholders. On this occasion, we start with good country level contribution during FY26, especially during Q4 of FY26. When the war emerged, the country had two issues before it. One is the availability of diesel exhaust fuel issue, and second is requirement from higher ammonium nitrate. In view of the war, there was disruption in the logistics where the company came forward and supported on both this. My colleague Mr. Patel will cover more on this. Now coming to the operating performance, the Q4 performance in terms of chemical volumes has been better. Whereas there is some impact of war in case of urea, which is recouped to some extent by utilizing the facility of technical grade urea. On a Q4 versus Q4 basis, the chemical is down, but the fertilizer has been up. On FY to FY basis, the numbers are not comparable in terms of production and sales because Bharuch had the annual turnaround. If we talk about the physical performance and chemicals in specific, there are two chemicals which have seen the impact in terms of volume. One is acetic acid and second is methanol. There is, in case of acetic acid, we had certain internal catalyst related issues because of which the volume was capped, production volume was capped, which did not result into the sales volume therefore. Whereas in case of methanol, the cost economics did not work out given the very high gas price. Even the oil prices have been hovering high, so we could not use even our oil-based methanol plant. Sales volume more or less has trailed production volume. There is an inverted relationship which is noticed between acetic acid and methanol, where acetic acid prices have tapered down, whereas the methanol prices have gone up. So this inverted relationship has affected to some extent the cost economics of acetic acid as well. While the overall volumes were capped due to shutdown impact, the soap is better mainly due to relatively lower input cost, which has been having a substantial impact on a full year basis. Whereas on a Q4 sequential quarter basis as well as year on year basis, there are strong realizations which are happening in case of chemical. In spite of the competitive headwinds, which were particularly noticed in case of aniline TDI, the company not only survived but did better during the year. In case of fertilizer, the revision both in urea fixed cost as well as energy norms are yet to happen. And this is overdue as the losses are widening in case of fertilizer segment. Coming to the financial performance, as is apparent, the revenue on a quarter-on-quarter basis improved by 11%, on a YOY basis by 7%. Full year is not comparable, whereas PAT has improved on a full year basis by 35% to 797 crore, with 1,065 crore of PBT. Main reasons driving this profit is the better realization in case of chemicals, mainly in Q4, both sequential Q4 and YOY Q4, whereas on a full year basis, it is mainly the impact of benign raw material prices, which are in relative terms benign. In terms of whether there are any one-timers or not, there are one-timers of around 30 crore in Q4 and around 80 crore on a full year basis. If we compare the full year basis of a previous year, we are higher in terms of one-timer gains by around 50 crore. So one-timers were 30 crore last year, which is 80 crore this year on a full year basis. Company continues to generate strong operating cash flows as is apparent from the cash flow statement. Considering all this, board has been generous and declared a dividend of 210%. This is 21 rupees per share, which is historically the second highest dividend in its history of 50 years. On the balance sheet front, with internal accruals, it is becoming healthy and ready with capex pipeline accumulating. The new projects identification will have clarity by end of this calendar year for taking it to the investment level grade decisions. Due to the war in the late February and early March, it has impacted slightly the volume of TDI as well as neem urea. And like I said, the neem urea is compensated with technical grade urea because of the overall facility available. In terms of segment, the improvement is mainly driven by chemicals. The other segment represents mainly the IT division, where there is an improvement in revenue of around 20%, and the profit has doubled from 17 crore to 35 crore. For the capex, there is an update which we have covered in the investor presentation that we had earlier plan of JV with INEOS. Now we are talking to them about licensing for additional capacity. So that dialogue is on with INEOS. Now I am handing over the session back to moderator for further interactions with the stakeholders. Thank you very much.
Speaker, should we open the line for questions?
Yes, Riju, you may proceed.
Yeah, thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Nirav Jimudia with Annual Web. Please go ahead.
Yes, sir. Good afternoon, and thanks for the opportunity. So first of all, congratulations on a very good set of numbers. Sir, few questions I have. So first is, sir, when we see our raw materials, like which are very, very critical in terms of our production, which are like methanol, which you have covered in your opening remarks, along with oil, which we procured from the oil marketing companies for our ammonia production, as well as benzene and toluene. So how are we placed in terms of the availability of them, especially the oil part, which we purchase from the IOC for our ammonia production? So if you can share your views here in terms of how we have been in Q4 and how are we in terms of Q1 and Q2 for our availability of raw materials.
Okay, I am D. Parikh. I will cover this question on behalf of materials, although they are better placed. So if I am missing anything, I am requesting my colleague from materials to supplement. So in case of oil, there is no issue we have faced even after the Hormuz issue came up. So IOCL has been consistently supplying the required materials in terms of oil as a feedstock. As far as toluene and benzene is concerned, our contract, which was there for procurement of toluene benzene, expired sometime end of financial year, and we have got a short-term extension on those contracts considering the war situation. However, we are not facing any issue in terms of its availability so far. Although the prices have spiked because of the war situation, we are still not having any issue in terms of availability. Now I hand it over back to our materials team for further comments.
Yeah, good evening. Already our Executive Director, Mr. D.V. Parikh, has appraised that as far as the supplies of oil, benzene, toluene is concerned, we are not facing any issues on front of availability till date. And whatever the requirement is there, it is coming on a consistent basis.
Correct. And sir, about the methanol part, because it is not viable to produce in India given the higher gas prices, how we have been able to secure methanol, and since the Iran war has begun, I believe that there could be an availability issue coming from Iran also. So how we have been able to source effectively the methanol part, and for how many months we are covered for?
Okay, I will.
Yes, please, sir.
May I cover?
Yes, sir.
Okay. See, methanol, first of all, you are right. It has gone through a volatility, and that has affected the cost economics of acetic acid. So of late, what the company is doing is it is evaluating whether it is viable to produce acetic acid or source from the market for manufacturing the further downstream called ethyl acetate. So we are following both. If wherever we get the methanol below the viable price, we procure methanol. In case it is not working out, we also keep a channel open for sourcing acetic acid. So this way we keep we serve the customer demand and also try to optimize the contribution level.
Got it, sir. Sir, second, what I could see is that the oil cost for us during the quarter 4 was more or less similar to Q3. In fact, it was slightly lower than what we have incurred for Q3. So if you can help us explain, like, what is the formula on which IOC gives us the oil, A, and B, how could we see this cost for oil to us in Q1 or probably Q2? If you can just give the roadmap of the oil cost to us, that would be very helpful.
As far as Q4, I'm Dilip Parikh, I will explain this, and thereafter we hear from materials as well. As far as oil prices for sequential quarter basis is concerned, there is a reduction in the oil prices. Regarding your question, I'll also tell you about what is the reduction. There is a net reduction of 3,000 rupees on a sequential quarter basis, on a per metric ton sequential quarter basis. Now coming to the question on how it looks like in Q1 as well as Q2, see, there is a volatility and there is a sharp volatility. As compared to March, there was a significant difference in April. However, this keeps on changing, and doing a prognosis on that based on how far the war is going to continue and what exactly is going to happen to the strait from where most of the material comes, to the Strait of Hormuz, is anybody's guess. So on future Q1, Q2, we are unable to exactly answer your question because that's a prognosis for the future and hard to make prediction.
Correct. But sir, like, let's say from March to April, how much was the increase A and B? On what formula basis does IOC gives us flow? Like, it is based on a monthly basis or it is fixed on a quarterly basis? So what is the formula here?
Okay. The broad contours of the formula we can give. It has a trailing impact in terms of like monthly. There is a cutoff monthly date of the previous month, and thereafter it considers 30 days. And it has a benchmark index with various elements being added for import duty, etc. So these are the broad contours of the formula with IOC. Regarding your question on what exactly has been the increase in April versus March, this is something which is sensitive information. But still, if MM can give a broad idea, I request Nirmesh Bhai Desai to comment if he can.
If you look the oil prices prevailing in the month of March and oil prices prevailing in the month of April 26, there was a significant difference or significant rise in the month of April on account of higher indices worldwide.
Correct. Got it, sir. Sir, if you can share the production numbers for ammonia, both from oil route and gas route, WNA, CNA, N melt, and TDI for FY26.
Ammonia oil route was close to 3 lakhs metric ton. Gas route was 3,60,000. I am Nitin Patel, Executive Director. CNA was 1,47,000. WNA 4,30,000 approximately, and TDI around 57,000.
Okay. Sir, AN melt and formic acid?
Formic acid was close to 34,000, and AN melt was close to 1,70,000.
Okay. Sir, you covered in your opening remarks that there could be an issue with reference to the acetic acid. But let's say apart from acetic acid, are there any other products where we could see production problems or let's say production difficulties with reference to the availability of raw materials? Or also if you can share that with reference to what we have produced in FY26, is there any product from our product basket where we can still optimize in terms of the production in FY27?
We have closed FY26 with no curtailment of any production. Productions were at peak and at optimized level. Going forward, it all depends on war situation, how quickly it resolves, and what is stored in future. It is very difficult to predict, as my colleague has explained, for example.
Correct. And sir, out of this 1,47,000 tons of CNF produced, how much it was sold in the market?
Around 45%.
45% was sold in the market. Okay.
That's right.
And correct. And any ammonia was available for sale in the spot market, or entirely it was used for our captive production?
Entire ammonia was used for downstream captive production.
Okay, and there was no need to purchase any ammonia from the outside market, right?
That's right. In Q4, we haven't bought.
Correct. So next question is on the annealing part. So when we see our presentation, like India imports substantial volume, like to the north of 250,000 tons, and we have been the only player. So just wanted to understand, like, why over the years we haven't expanded the capacity, and if you can correlate this with like the AT Kearney which we have hired. So are there any suggestions from them in terms of any expansion for the aniline part, or why we not been able to increase the capacity of aniline given benzene is available in abundance in India? So what was stopping us for expanding the capacity of aniline?
See, first I will cover the technical part, then Mr. Tejas will cover the market part, and then Parikh Saab will summarize about aniline question. So far as aniline is concerned, the cost of hydrogen is important.
Okay.
Hydrogen is one of the raw materials along with CN and benzene.
Okay.
Benzene I am buying, hydrogen I am producing from the fuel oil.
Correct.
And I have to compete with the Chinese producers who are producing the from coal the required hydrogen. And the capacity of scale, I have a limited capacity. Chinese plant have more than 7 or 8 times a single location capacity. So scale matters, and there is a import dumping in the market, which I will ask Tejas to cover. And basically on a standalone, we are not viable in aniline, so we are doing the job work of some other companies on a fixed margin basis. Tejas.
I am Tejas Shah. As Executive Director Nitin Bhai said, it is right, there is huge dumping from the China, although there is an anti-dumping duty, which is minimal. From Vanwa it is $37, and other than Vanwa it is $121. Because Vanwa and all other big players have a huge MDI plant, and aniline is an intermediate product in MDI production. So when the MDI market is slightly down, they dump the aniline in Indian market. So it is very difficult to compete with the China market aniline. So that's why we have not enhanced our capacity, because Chinese aniline is very cheap.
Perfect, sir. Perfect. Got it. So next question is on the TGU part. Like you highlighted and you alluded that TGU production was slightly better in Q4. So if you can share here that how much we have produced in Q4 and FY26A, and B, let's say as against our rated capacity of 169,000 tons, how much maximum we can produce a TGU in a year, and why is TGU so much important from India's point of view? Like, there are any substitutes for TGU which can be replaced on? So these are few sub points on TGU.
See, I will ask from production point of view. I am Nitin Patel. Normally, my breakup is that around 20% of the total urea production I can produce from industrial ammonia, oil-based ammonia as a TGU. Now, subsequent to war starting, we immediately increased the TGU production at the cost of neem urea, because country wanted TGU. We are the only manufacturer apart from GSFC which has a small quantum and little inferior quality than us. BS6 engines need diesel exhaust fuel. So entire logistic was on the verge of collapsing, and we rose to the occasion, and we simply doubled our TGU production for the month of March, and we are still continuing on that, keeping little bit deficit on the neem urea, compared to the target given by Department of Fertilizers. And our this initiative was well appreciated by Ministry of Heavy Industries, Automobile Industry Association of India, as well as Department of Fertilizers. So this is all about TGU. In general, the capacity of 1,69,000 is an average capacity which I spoke about. It largely depends on shutdown of the urea plant, which we take once every 2 years, and also in between interruptions, if any, in urea plant.
Correct.
We produced more than 210,000 in FY26.
Correct. So let's say 210,000 and 20. So let's say the urea production hypothetically should be 1 million tons, so that we can get 20% permissible limit to produce TGU. Is the right way to understand this?
No, my urea reassessed capacity is 637,000, and I close by a deficit of around 15,000 to that figure, and the rest was TGU.
Correct. Got it, sir. Perfect. So next question is on, let's say the coal-based boiler, like last time you updated us that it was supposed to start in April. So what is the update there when it is going to start, A, and B? With the current gap increase between the gas and the coal prices, what is the current estimate in terms of the benefit in rupees per metric ton of savings which could accrue for the TDI production?
Okay. DV Parikh, I'll answer this question. The coal-based CCPP, as we call it in our presentation, was to start sometime in April, but the lump sum turnkey contractor faced certain delays, and they have revised the date now for synchronization sometime in the third week of June, and for the performance guarantee test run to make it available on a full stream basis, it is sometime in the third week of August 26. So this is on the likely commissioning of CCPP. Regarding the cost differential, gas prices are going up, so are the prices of coal have also gone up. Our last estimate was to the tune of around 10 to 12 crore per month, which was the saving potential. So we maintain that should really accrue once it is up and running, given the escalated prices of gas and coal.
And this should start accruing to us from H2 of FY27, right?
Yes.
Correct. So last question before I join back in the queue, any update on the fixed cost revision for urea and revision of energy consumption norms? Like you highlighted in your remarks that it has been now a long due. So where are we currently in terms of both these aspects?
No, there is no particularly update in terms of formal communication. Okay, although we keep on approaching department from time to time, but the update to us is energy norms are under approval and the fixed cost revision is still at discussion stage.
Okay. And sir, one more clarification, like are our entire product basket, what we produce, the sales happens on a spot basis, like whenever the prices changes in the international market, we revise that, or are there any contracted volumes also?
I am Tejas Shah. We are doing the variable price contract. So whatever the prices are changes along with the international market, that will be effective to the customers, upward or downward.
Correct.
A small portion of this we do it through a very short-term contract as well. And that is what is the policy structure of the company also. But by and large, this contract extend a month or 3 months at the most.
Got it. Perfect, sir. Thank you so much, sir, for giving me all the details, and wish you all the best. I'll join back in the queue.
Thank you. Next question comes from the line of Rohit Sinha with Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question, sir. Couple of questions from my side. One is, we have seen a price increase in a lot of chemical products recently. So, just wanted to check that how much we have, in how many products we have taken similar kind of price hike, and where we have faced challenges in terms of taking any price hike, and how much of that benefit of increase in price was reflecting in Q4 number, and possibly how much we would be expecting in the Q1.
Okay. I will answer on an overall basis first. Except formic acid, everywhere in chemical, there is a positive realization on a sequential quarter basis. And the higher realization, like we said, both has contributed both on sequential and YOY basis to this profitability. As far as individual product pricing is concerned, I will request our marketing colleague, Tejas Bhai Shah, to respond.
Yeah, where Mr. D.V. Parikh has said, except formic acid, we got good realization in Q3 compared to Q4.
You mean Q4 compared to Q3?
Yes, Q4 compared to Q3.
So, any broader number, if you can highlight about the percentage where we have seen, like 30-40% on an average.
It's product to product, but if you see the range, it is from 6% to 28%.
Okay. And similarly for the fertilizer side, how the pricing revision we are expecting going forward, because I guess we haven't seen anything as of now. So probably can we expect fertilizer division to turn positive in coming quarter, or it will still remain at the EBITDA level, it will still remain in the similar range?
In fertilizer, there is an under recovery like we covered, and till the time norms are revised both for fixed cost and energy, we see almost no chance in case of urea. In case of the complex fertilizer, we do earn because of this nutrient-based pricing at a contribution level.
Okay. And just one last question on this capex towards the ammonium nitrate and nitric acid thing. So how that is progressing for us, and how we are seeing the market overall for this ammonium nitrate going forward for FY27-28?
See, both these three projects actually, ammonium nitrate, weak nitric acid and ammonia expansion, are going on track. There is a slight minor delay in case of weak nitric acid of around 2.5 months. The rest are all on the stream. As far as the price prognosis is concerned, I will request marketing to respond on this.
As far as the ammonium nitrate is concerned, CAGR is around 6 to 7%. So slowly all the capacities, Chambal, even Deepak Fertilizer and GNFCs are coming up with their plants. Slowly all the capacity will be absorbed. Presently around 4.5 lakh import is there in ammonium nitrate. So based on the domestic capacity increase, there will be no import in the future and domestic production will be absorbed in the market.
And I'm Nitin Patel. If you know the public news, which recently Government of India has announced that coal-based chemicals would be a priority. There is a package announced, and Coal India has a very ambitious target for the mining, and for mining, the explosives are required, and for explosive, ammonium nitrate will be consumed. So going forward, as Mr. Tejas told, looking to CAGR and ambitious thrust by Government of India for self-sustenance on coal route, we do not expect any issue in absorbing the additional volume produced by us.
Got it. And sir, if you could help us with the price trend in last 2-3 months of this ammonium nitrate.
Ammonium nitrate price is in the Q4 ammonium nitrate price was increased just because there was an increase in ammonia price, international ammonia price, and the presently price is stable, whatever they at the peak level, and we are observing the market. Import is less at present just because of Russia and Ukraine conflict, because mostly import is coming from the Russia. So presently price is good in ammonium nitrate.
So on a quarter-on-quarter basis, there is a 20% improvement in the ammonium nitrate prices, roughly.
Got it. And that is currently sustaining at higher side.
Yes.
Okay. That is from my side, sir. Thank you.
Thank you. Next question comes from the line of Aman Kothari with Equitas Investments. Please go ahead.
Thank you. Congratulations, sir, for the wonderful set of results. So first question that I have is, can you just give us an idea on the chemicals that will see limited operationability in Q1? Because methanol is a challenge that we've been facing. So are we facing difficulties in production of, let's say, acetic acid, methanol, and also I think ethyl acetate is where we use glacial acetic acid. So are these three products being affected?
If you remember, I am Nitin Patel. If you remember, our CFO has already covered this issue in the opening remark and in the first question. In Q1, the gas prices are high, so methanol production is not viable. At the same time, we are exploring both the options for our downstream, that is at a threshold to buy methanol for captive production of acetic acid, or to buy acetic at a threshold price for the captive production of ethyl acetate.
Got it. And so currently, as you mentioned, TDI and toluene both have seen price increase, but can you just give us an idea on what the improvement has been in Q1 on the spread? Because I think at the end of the year, we were almost at a 3-year high in terms of the spread.
Aman, this is Rajesh here, Company Secretary, and I would request all the investors, because this con call is for Q4 as well as for FY 25-26. So I request all the investors to please limit their questions to that quarter, because Q1, it's a price sensitive information. We will not be able to provide such details.
Okay. So this quarter, we have also seen an increase in the loans and advances. So from 565, we have gone to roughly 2,400 crores. So can you just give us an idea on what this increase has been?
See, this is an inter-se change. When the investment profile changes from one source to another source, this is the difference. So we also invest in intercorporate deposits, okay, for the surpluses. So this change in amount reflects that as well.
Okay. And it has been done for a strategic purpose?
For the time being, till the time our capex cycle is over, we park with the best yield to the extent possible. So these are the decisions which are based on yield base for temporary surpluses.
Got it.
Mr. Kothari, are you done with your questions?
No, just a last question on my side before I join the queue again. Do we have any plans for buyback currently? Is there anything on the table that we would consider?
As of now, we have nothing in the pipeline. So it will be all decided, and we will inform to the investors and the shareholders as and when the situation arises.
Okay. And just the last question, I think there was a policy or news that come out that government is looking to come up with a new urea investment policy. So in that case, if there is a policy that comes out in support of setting up domestic urea manufacturing facilities, is it something that the management would consider?
It depends upon what are the details of the policy. So without knowing the details of the policy, it is premature to comment. And second is, we will have to compare it with the other investment opportunities which is available in general. Normally what happens is, this is a regulated kind of business segment. Yeah. And chemical is more or less an unregulated one. So our experience so far has been, like you see in the segment results also, we make good money in unregulated markets. Unregulated meaning not so governed in terms of caps on profit. At times we lose, at times we gain, but this is how it operates. It does not remain perennially into losses. So when it comes to fertilizer, we'll have to evaluate the details of the scheme as and when announced.
Got it. Thank you, sir. I'll just join back in the queue.
Thank you. Next question comes from the line of Nirav Jimudia with Annual Wealth. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, you mentioned that there was a one-time income of 80 crores in FY26. So what was it all about, and how much we have booked in Q4 of FY26 out of this 80 crores?
Q4 has 30 crore of one-timers. When we talk about one-timer, basically it is like sort of insurance receipts which are there. Government of India has settled the freight rates effective 21-22 till 23-24. So that income is also part of that. Mainly it comprises of these two when we talk about 30 crores. And when we talk about 80 crores, last time it was already 50 CR, this time it is 80 CR. So, last time it was 38 CR and this time it is 80 CR. So there is a net difference of around 45 crores or so in terms of income, one-timer income. And again, this represents mainly the insurance receipt and escalation of fertilizer freight rates, urea freight rates. Aside from this, we had one-time income on disposal of catalyst dust of weak nitric acid plant and some penalty on account of the CCPP delay, which is the power plant delay at Dahej.
Perfect, sir. Got it. Sir, apart from the raw material issue which may come or which may not come for our production schedule, are there any planned shutdowns which we are planning for next year?
We have a planned shutdown in April 27.
Okay, perfect. Sir, next question is on the ammonium nitrate. So the production numbers what you just gave us, is it also includes the byproduct element which we get from ANP production, or that is separate, sir?
Yeah, it's a total.
Okay. And how much generally we get a byproduct out of ANP fertilizer?
My direct synthesis has 50,000 and rest is byproduct.
Okay, got it. Perfect. Sir, next question is on when we see on a quarter-to-quarter basis, like there was a 300 crores improvement in the EBITDA between Q3 to Q4. So if you can just highlight which of the products have contributed to this improved performance in order of their contribution, that would be very helpful.
So you want the major product which contributed to this performance?
Correct. Improved performance.
Okay. So one is TDI, second is ammonium nitrate, and third is technical grade urea. So these are the products which have contributed to the improved performance during Q4 on a sequential quarter basis.
Got it. Perfect. And sir, last question from my side. Last time you have explained us about some cost saving measures which could accrue to us in FY27 based on Etty Kearney's recommendations. So now with the 3 months or 4 months passing through between our last conversation, so are there any further measures being directed or given by or suggestions given by Etty Kearney which now could be safely implemented by us, or there could be some further cost saving initiatives, anything which you can share?
Okay. See, when they were appointed, there was a saving number which we discussed. Overall, there is some delay in the overall realization as well as indication from their side, which they also acknowledge. As far as accrual is concerned, there are certain proposals which are made and which are in the process of approval. Once that is done, the number would be woven, but then it will start gradually sipping into 26-27. As far as last year is concerned, there is some saving on account of oil, which has happened due to their effort. So all the numbers would be reconciled one day with them when the assignment is about to be over. So let all the initiatives as of now take place, and different initiatives will give different kinds of saving with a different intensity. So we will reconcile at the end of the assignment, but some saving has already accrued. And that saving to some extent has arisen in case of predominantly the oil.
Perfect, sir. Perfect. Sir, last bit from my side, like slightly on a technical part. Sir, you explained us about the aniline part, like hydrogen, as well as CNA and benzene are the key raw materials for aniline. So just wanted to understand how is so let's say from my understanding point of view, first nitrobenzene is produced and then the aniline is produced when we go through this synthesis process. So, and what I believe is that even nitrobenzene, there is good demand from even the rubber chemicals and other industries. So, if you can just explain me the technical part in terms of where the nitrobenzene comes in this production process and how much nitrobenzene we produce on an annual basis.
Nitrobenzene, rightly you explained, it is an intermediate and it is reacted with hydrogen to produce the aniline. And CNA plus benzene are used to synthesize the nitrobenzene. Nitrobenzene has a limited market. Bulk goes for captive aniline production. I'll ask Tejas to say a few words about nitrobenzene market.
Yes, you are right. Nitrobenzene is used in rubber chemicals. We are supplying to the rubber chemical manufacturers. But most of the nitrobenzene goes to the aniline production. We have a market and we are selling nitrobenzene as an intermediate product.
close to 13% is going for sale and rest is going for captive.
Got it, sir. Thank you so much, sir, and wish you all the best.
Thank you, Nirav.
Thank you. Next question comes from the line of A.M. Lodha with Samadhi. Please go ahead.
Hello. Hello. Am I audible, sir?
You are audible. Please continue.
Sir, Mr. Parekh, my question is number relating to, sir, plant capacity utilization of the overall capacity is on the plant of the this TDI, acetic acid, and all other plants which are companies running at the what capacity?
See, plants are running at a peak capacity. Capacity utilization in case of acetic and most of the plants is above 100%. So far as TDI is concerned, it is close to 80%. Worldwide, the operating factor for TDI is close to 80% because of the complexity and challenges in operation and maintenance of the plant and nature of the material which is to be handled. So we are close to global benchmark even for TDI in spite of many issues which we are facing at times in our headquarters.
Congratulations.
Thank you, sir.
TDI is our bread and butter, and if we are operating plant at 80%, how the TDI prices are remunerative to the company, sir?
In last quarter, yes, we had a good prices, remunerative prices. Current quarter also the prices have softened down, but still better.
Okay, sir. Another thing, sir. Second question. The one-time 80 crore additional income or extraordinary income, which is pertaining to what, sir?
I'll explain again. First of all, the net difference on a year-to-year basis, absolute amount is 80 crore, but the net difference is 50 crore because last year anyway around 38 crore were there. Okay?
On account of which?
Now coming to the factors which have contributed to one-timers, like I explained, we had an insurance receipt of around 28 crore. We have settled escalation urea freight claim of 15 crore. And we also had some realization on account of catalyst dust of weak nitric acid plant. And the fourth one is related to some penalty recovery for the delay in the project of CCPT.
Okay, sir. My last question, sir. This 2,400 crore is shown in advance sale. Excellent, which I could gather from the last conversation, that it is intercorporate loans. It is given to PSU companies or the private sector companies, sir?
PSU.
PSU. What is the interest rate they are rating to the company, sir?
Around 7.25.
Intercorporate is 7.25.
Yes.
But nowhere in the world, sir, intercorporate loans are being given at 7%. If it is the Gujarat Financial Corporation?
Yes.
Okay, then it's all right, sir. Because it is amount is secured, then it's all right, sir. I thought, we thought it is to the any private sector, it is intercorporate loans ranging.
No, our company governance doesn't allow loaning to private sector like that. It is only our own arm where we can draw for the real capex needs in time to come. So you are free to ask any other questions, sir.
The only last question, sir. The acetic acid prices. Acetic acid prices and ethyl acetate prices, they are correlated. So just I wanted the acid, what is the trend of the acetic acid prices and trend of ethyl acetate?
Presently, as far as the international trend is concerned, the acetic acid as well as ethyl acetate trends are in reducing trend, both the prices. International prices are reducing trend.
I will cover for a full year basis. Practically, if we see the full year last year and this year, practically there is no major change. We had a realization where it has not changed even by 1,000 rupees in both the products taken together.
Okay.
But if you see quarter to quarter, because of this kind of disruptions, there is an upheaval in the prices. But on a full year basis, there is less than 1,000 rupees per metric ton difference.
Okay, thank you, sir. I will rejoin the queue if you have any question.
Thank you. Next question comes from the line of Rohit Sinha with Sunidhi Securities. Please go ahead.
Yeah, just one question, sir. On the capex side, how much the overall capex would be there for FY 27 and 28?
The capex for FY 27 is going to be around 2,800 crores.
And for 28, if you can share?
28, we would be in a position to tell in quarters coming, because as we finalize the rest of the capex and firm up in terms of its schedule, we will come to know better.
Okay. And this is ammonium nitrate, nitric acid and ammonia plant will be finally coming up by FY 28 early. Right?
Yeah, next year these are going to come up.
Okay.
All the three,
that's it from me.
ammonia expansion, the weak nitric acid, ammonium nitrate melt, all are going to come up by next year, and this year the CCPP is going to be operational by quarter 2.
Got it, sir. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, we have reached the end of question and answer session. I now hand the conference over to Mr. D.V. Parikh, Executive Director and CFO, GNFC Limited, for closing comments.
Thank you very much for attending the call to all the participants. And on behalf of GNFC, we welcome further questions, if any, to our investor services cell. And please stay in touch. Thank you very much. With this, I hand over the call to our company secretary.
Thank you, sir. I, on behalf of the participants and senior members of the company, thank all the investors for joining this call. And I express my sincere gratitude to Mr. Riju as well as Mr. Anuj of Anurag Services for conducting this call. Thank you.
Thank you.
Thank you. Thank you.
Thank you. On behalf of GNFC Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.